Hey y'all, I want to talk to you real quick about something that should be high on everybody's radar, top of mind, just high alert for whether you're a realtor or a buyer in this market. It has to do with the hazards of the buydowns, the interest rate buydowns, specifically the temporary buydowns. As the market shifts and it just has become a bigger challenge, obviously, to get a buyer's monthly payment into a comfortable range, these buydowns have become popular again. But there's two types, the temporary and the permanent. Temporary, also known as a 2-1 buydown. Here's how they work. So let's say you have a house that's $500,000. You get a 2% credit from the seller towards the buyer's closing costs. That 2% on a $500,000 house, $10,000. So the buyer can take that and apply that to a 2-1 buydown. And in doing so, instead of a rate today that might be 7.25% on a 30-year fixed, they get the first year rate at 5.25%, then the second year goes to 6.25%, third and remaining years goes to 7.25%. They get some pretty significant relief in that monthly payment the first couple of years. But here's where the problem lies. A lot of these buyers are just being told, oh yeah, you can just refinance it as soon as the rates come down, no problem, so this is only temporary, you won't have to deal with that long-term rate. That should never be told to anybody. Unfortunately, there are some lenders telling buyers that that's how it's going to work. No problem, you can just refinance it. Well, there's no guarantee. If we all had that crystal ball with a guarantee, it'd be a different story. We don't have that crystal ball. So yes, interest rates are expected to come back down again sometime next year maybe, and a lot of people are going to have the opportunity to refinance and take advantage of that. Here's where the problem is. If a buyer just goes into a house and puts the minimum down or 5, maybe as much as 10% down, if home values at the same time, if they have softened a little bit and have slipped by about 5, 6, 7%, how are they going to be able to refinance it? You still have to qualify. When you do a loan, whether it's a purchase or refinance, you have to qualify. Loan to value is part of that qualifying. So if all of a sudden your loan to value is so high that you can't refinance, then you have to understand that you're going to be stuck with that rate until the home values do go back up, which they will, but nobody knows when, right? And so if a buyer doesn't understand that, then they're going to be a little bit upset with somebody for not telling them the whole story. So it's important that they understand this. The permanent buydown might be a better option for them. And it may not be that the rate drops down as much as a 2-1 buydown, but it does drop down. And we've seen with the wholesale lenders that I work with a lot of flex in their interest rates from day to day. I've seen it where as much as a 1-point credit, so 1% of the purchase price, can actually buy down the interest rate as much as a 0.5 percentage point. Traditionally, in a more normal market, it usually only buys it down about a 1/4 percentage rate. But lately, it's been as much as a 1/2. And I've seen with a 2-point buy down where it has gone down as much as almost a full percentage point in interest rate. That's pretty significant. And it's permanent. So they don't have to worry about the interest rate jumping up on them in the second or third year. Now, 2-1 buy downs, they are good for a lot of buyers. They're also not good for a lot of buyers. The key is to understand how to advise that buyer and make sure that they fully understand how that loan works and how they could be faced with a higher payment in the third year that they won't be able to. So just wanted to bring that to everybody's attention. If there's a lender that is telling you that, oh yeah, you'll be able to refinance it, no problem, you need to get a second opinion from another lender. I'd be happy to provide you with that second opinion. For FHA and VA buyers, it's not as big a deal because there are streamlined refinances available. So even if the value of the house goes down a little bit, they'll still be able to refinance as long as they qualify in the other areas. So, but let's be honest with people. Let's be transparent. Let's make sure that people are well advised. If your lender is not advising you of the whole story that comes with the buy downs, let's talk. You can call me, text me, email me. I'd be happy to go over it with you, whether it's just to give you a second opinion or whether you just want to work with somebody else like me. So let's talk. I hope you guys have a great day, and hopefully this is informative for you.